Canada's lumber sector on life support. Tariffs push it to the brink.
45% duties incoming. Canada's $12 billion forest industry under siege.
Tariff shock. Canada timber towns stare down collapse in 2026.
Trade wars escalate. Canada's forest jobs could vanish overnight.
It hit like an ambush. Overnight, Washington's new tariffs detonated across Canada's forest belt. A 45% tax bomb on lumber exports worth $12 billion a year. Mills froze production, investors panicked, and by dawn, entire towns were asking one question: was this protection or punishment? Because if the math holds, Trump's 2026 tariff surge could erase 20,000 Canadian jobs, cripple cross-border housing supply, and ignite the most explosive trade war North America has seen in a decade. Across British Columbia, Quebec, and Alberta, sawmills that once roared day and night have fallen silent. Forklifts idle under metal roofs. Stacks of unsold timber bake in autumn light. For thousands of families whose paychecks depend on lumber, the word tariff no longer sounds like policy. It sounds like foreclosure. Trump's new trade order announced in October 2025 raises duties on Canadian softwood lumber from 8% to as high as 45% by mid-2026. The official line from Washington is fairness for American mills, but the timing and severity hit Canada like a sledgehammer. This is no routine adjustment, it's economic warfare disguised as policy. Bloomberg estimates the tariff targets a sector that feeds nearly 1 in 10 manufacturing jobs in rural Canada. The Canadian Chamber of Commerce warns that if tariffs hold through 2026, the nation could lose $3 billion in annual exports and tens of thousands of jobs in milling, shipping, and forest management.
To understand why this hurts so deeply, you have to rewind. The US-Canada softwood lumber dispute is one of the longest-running trade wars in modern history, stretching back to the 1980s. Washington has always argued that Canadian provinces subsidize their lumber industry by charging below-market rates for cutting trees on public land. Canada says that's nonsense. Its system reflects ecological management, not corporate welfare. Over 4 decades, the two sides have signed and broken multiple agreements. Every few years, duties go up, cases pile into the World Trade Organization, and workers on both sides brace for layoffs. But what makes this round different is the magnitude. This is the highest tariff level since the early 2000s, and the first time a US administration has openly tied it to domestic politics instead of market law. In Trump's messaging at rallies, the message is simple: protect American jobs. It plays well in swing states with sawmills and construction workers, places like Maine, Michigan, and Wisconsin. But according to economics at TD Bank and the University of British Columbia, the real math tells a different story. US mills simply can't replace Canadian supply. They produce about 70% of what the housing market needs. The rest comes from north of the border. Cut that flow, and you don't create new US jobs, you create shortages.
Which means that as Canadian exports shrink, American home builders will pay the price. Higher lumber costs mean higher mortgages. The National Association of Home Builders estimates that for every $1,000 increase in average home cost, 140,000 US families are priced out of the market. So the very tariffs meant to protect American workers could push American buyers further away from owning a home. Canada exports roughly 65% of its softwood lumber to the US. That's about $12 billion a year, a lifeline for rural economies from Prince George to Thunder Bay. When duties rise from 8 to 45%, that's not a tax adjustment, it's a death sentence for profit margins. Industry leaders say they can survive short-term volatility, but not long-term uncertainty. Many remember the 2017 tariff round that shut down over 20 mills in British Columbia alone. If 2026 repeats that pattern, hundreds more could follow. Bloomberg data shows that for every $100 of Canadian lumber sold to the US, tariffs will now claim $45 in duties. Margins collapse instantly, cash flow dries up, investment stops, forests stay uncut, not for sustainability, but for survival. This is what trade wars look like on the ground. Drive through forestry towns like Quesnel, BC, and you'll see the cost in human form. A father of 2 who has spent 25 years in the mill line now fills out forms for unemployment. A small trucking business with 3 drivers now has none. These aren't headlines, they're neighbors.
For Canada's Indigenous communities, the stakes are even higher. Many First Nations own or co-manage forest operations that fund local education and health projects. The Assembly of First Nations has called the tariffs a direct attack on economic reconciliation. Ottawa's scrambling to respond, offering bridge funding and exploring retaliatory duties on US goods such as paper and construction materials. But diplomatically, Canada's trapped. retaliate too hard, and you inflame the White House. Do too little, and you betray your workers. The shock isn't confined to Canada. Across the US, home builders, furniture makers, and retailers are bracing for rising input costs. Analysts at Moody's project lumber prices could spike 25% by early 2026 if supply chains don't adjust. Construction companies say they're already seeing delays in budget overruns. The average new home in Texas or Florida could cost $10,000 more by next summer. That's inflation hitting families at the most sensitive point, shelter. Meanwhile, Canada's currency, the loonie, has slid as investors brace for export losses. Forestry stocks like West Fraser and Canfor have lost double-digit percentages since the announcement. Insiders say the tariff decision wasn't just economic, it was symbolic. According to Express News, Trump framed the tariffs as reclaiming American industry from foreign undercutters. But in private, US officials admit it was also a signal to China and Europe. No ally is immune. Canada is the safe target, close, dependent, unlikely to retaliate militarily or strategically. It's a warning shot dressed as a policy paper.
Trade law experts note that Washington's own International Trade Commission found no clear injury from Canadian imports in 2024 that makes the new tariffs legally contestable but politically profitable. And that's the heart of the story. Politics over economics, votes over values, short-term headlines over long-term stability. Canada now faces a terrifying choice: accept the blow and hope for a deal after the 2026 US election, or fight back through the World Trade Organization, a process that can drag on for years. Either way, the damage is immediate. Factories are cutting hours, suppliers are laying off drivers, and rural towns built on the rhythm of sawmills are preparing for another winter of uncertainty. No one knows how far the shock will spread, but one thing is clear: the tariff war has already redrawn the map of North American economics. By late 2025, Canadian lumber shipments to the US had dropped nearly 30% compared with the previous year. Train cars, once loaded with pine and spruce, now sit idle on sidings across Alberta. Export warehouses near Vancouver report record backlogs. In Washington, lobbyists for US homebuilders are pleading with Congress for relief. "We're not asking for free trade, we're asking for affordable roofs," one industry group told Bloomberg. The irony couldn't be clearer. Tariffs meant to defend American jobs are now squeezing American families.
Meanwhile, Ottawa is pouring $500 million in emergency support into forestry communities, loan guarantees, tax breaks, job training grants. But even federal aid can't replace lost buyers, says one BC economist. Once lumber slows, everything slows. Construction crews in Seattle postpone housing starts. Furniture makers in North Carolina delay deliveries. Freight routes contract, hitting truckers, fuel vendors, and rail operators. A $12 billion Canadian export loss can ripple into a $40 billion North American slowdown within a single fiscal year. And as inventories shrink, prices rise. U.S. lumber futures jumped 22% in a single quarter after the tariff announcement. Analysts now warn that if the 45% duty persists through 2026, the average American home could cost $12,000 to $18,000 more to build. For Canadian provinces, the numbers are darker. British Columbia projects a GDP drop of 1.3%, its steepest contraction in more than a decade. Ontario's manufacturing corridor faces cascading layoffs. The forest sector, once Canada's quiet engine, is suddenly its exposed nerve. While Canada reels, other exporters are circling. European and Scandinavian timber firms are expanding U.S. contracts. Australia and Chile are pitching low-cost alternatives. But shipping lumber across oceans is expensive and carbon-heavy. That means higher retail prices, longer delivery times, and an environmental cost that undermines America's own sustainability agenda.
In Beijing, policymakers watch with quiet satisfaction. China has long courted Canada as a secondary lumber source. With U.S. access closing, Chinese buyers see opportunity, discounted Canadian timber feeding Asia's booming construction sector. What began as a U.S.-Canada dispute may end with China gaining stronger supply lines, an unintended geopolitical twist. Inside the Beltway, the tariff fight has become campaign fuel. Trump frames it as proof of strength. We stand up for American industry. Democrats counter that it's reckless populism disguised as patriotism. Senate hearings echo with phrases like economic arson and trade hostage diplomacy. But beneath the slogans lies electoral math. Forestry states hold swing votes. Blue-collar anger polls well. In short, the tariff is less an economic tool than a political prop, and Canada, once America's safest ally, is its stage. Ottawa, for its part, faces pressure from provincial premiers demanding retaliation. The talk now includes counter-tariffs on U.S. drywall, paper, and steel nails, sectors worth billions. Yet officials know escalation could collapse broader trade talks on autos and energy. The balance is delicate. Punish Washington too hard and risk a full trade freeze. Do nothing and risk domestic revolt. In northern Quebec, mill owners speak in resignation. We survived wildfires, COVID, and fuel inflation, one tells reporters, but not this. In Prince George, union reps gather nightly in shuttered cafeterias, planning carpools to job fairs that no longer exist. These stories rarely make the headlines, but they're the living texture of policy, the quiet wreckage behind the spreadsheets.
And across the border, ordinary Americans are beginning to notice the paradox. New homeowners delay construction, DIY stores hike lumber prices. In rural U.S. towns, builders now source second-rate imports because Canadian wood is priced out. The anger that fueled the tariff may soon boomerang back toward the politicians who sold it. Canada has already filed an appeal through the World Trade Organization and under USMA, the modern NAFTA. But those processes move slower than markets. Cases can take 2 to 3 years. Jobs vanish in months. Even if Ottawa wins, the damage will be done. Once mills close, restarting them costs millions. Skilled workers drift away, equipment rusts, towns hollow out. This is why trade wars rarely have victors, only survivors. There's another consequence few discuss. Idle forests mean less management, more wildfire risk, and lost carbon offset potential. When mills stop buying timber, trees age out of harvest cycles, leaving dry fuel for future infernos. Canada's 2023 wildfires burned a record 45 million acres. Reduced logging could make the next season worse, so a tariff aimed at protecting industry may ultimately amplify climate damage on both sides of the border. Allies are watching. If Washington can punish its closest trading partner for political optics, what message does that send to Europe or Australia? It tells the world that U.S. trade policy is no longer predictable, that even friendship comes with a tariff attached. Economists call this trust erosion, and once it begins, foreign investment hesitates. Global supply chains start hedging, diversifying away from the U.S. market. The long-term cost could dwarf any short-term tariff gain.
Is there a way out? Negotiators in both capitals whisper about a transitional framework, a temporary duty cut in exchange for tighter Canadian oversight on stumpage fees. Others propose a joint green lumber initiative that could turn sustainability into leverage. But every solution faces the same obstacle: politics. No one wants to look weak during an election year. So the talks stall, press releases spin, and the sawdust keeps settling. If nothing changes, by early 2026, the US may have secured a symbolic victory and lost an economic partner it can't replace. Canada, meanwhile, will be forced to pivot east, rewriting decades of trade orientation, new alliances with Asia, new shipping routes, new dependencies. And every move will leave a scar across the world's longest undefended border. Because this isn't just a tariff dispute, it's a test of how fragile modern alliances have become. When future historians trace the moment North America turned inward, they may point not to an election or a war, but to something quieter, a line of paperwork that priced trust out of the market. For a few political points, two intertwined economies began pulling apart, one plank, one job, one home at a time. And somewhere between the forests of British Columbia and the suburbs of Ohio, the real cost of protectionism was measured not in tariffs, but in lives reshaped by them. Because when walls rise between friends, no one wins. They just stop building together.